time is limited. Money, that can come and go. Time, it always goes. Make sure that your values, whatever they are, and what's important to you corresponds to your time commitments.
Yeah. From your perspective, right, the core and satellite, what's your thinking around what those percentages generally should be?
I know family offices that are running plus 90% illiquid portfolios, but I also know some that are running 10% illiquid portfolios. But there is a commonality between them, a lot of them in real estate, one way or another. When you make money, that's usually the first thing you buy.
Why do you believe the space economy is going to be a big wealth creation area in the future?
Less than 700 people ever who've gone to space in the history of mankind. Space is a very small club still, but we want to change that. We want to open it up so many more people can get the opportunity to go to space. Investing in space was still for high net worth individuals who were just passionate about it, didn't really look at a return or whatever, and that was certainly the case for me. I've invested in a number of space companies that has gone bust. In the past 7-8 years, the aerospace sector has changed a lot. It's actually become very investable.
Looking into the next 10 to 20 years, what role do you see space playing in our daily lives and global markets? Welcome back to another episode of the podcast. I'm your host, Atto. We have a special guest in the building. We have Per, who is a financier, entrepreneur, and adventurer, a former executive director at Goldman Sachs. He now runs investment businesses spanning aerospace, real estate, and wealth management. Known for his extreme adventures from skydiving over Everest to flying fighter jets to the edge of space. He's also the author of The Sky Is Not the Limit and The Green Bubble, a founding astronaut with Virgin Galactic, who has traveled to over 85 countries. Per brings a unique perspective on global markets, risk, and building wealth with boldness. Per, how are you doing today?
Very good. Pleasure to meet you.
Pleasure to metive you too. We were having a very interesting conversation offline. I was just saying to you, like you're such an adventurous person. I think I've never met somebody as adventurous as you. And you say that, you have a lot of that in your circles. I'm very excited about this episode because although we're going to talk about money and finance, I really wanted to talk about the adventure side of that as well, because I think a lot of that mindset, you can kind of apply it to the financial world and, risk taking and things like that. So I think it's going to be very valuable for the audience. So you've been called an adventurer, investor, and space explorer. When you think about who you are, how do you describe yourself?
I'm an adventurer, astronaut, philanthropist, financial entrepreneur, and author, award-winning author.
Mm. And where would you say your appetite for risk and adventure comes from?
It comes from a desire to learn. So deep down inside me, I've always had a deep desire just to learn, to enjoy life, the fullness of life, if you like. Mm. And that translates two ways. Number one, on the educational side, formal education. Mm. I've got 2 high school degrees, one from Denmark, one from France. And I've got 4 masters, which some would argue is a bit greedy.
Wow.
But it's because of that desire to learn, to learn more, be open for new ideas, etc. And then there's the informal side of it, which is what I call the university of life, is sort of getting out there. And that comes back to what you mentioned, the 85 countries and counting so far that I've visited. Getting out there, meeting other cultures, experience other things, taking yourself out of your comfort zone, getting out there, whether it's deep into the Amazon jungle or it's with other cultures where you feel slightly, long away from home, you learn.
Yeah.
You get impressions, good or bad, and most of the times a lot of good impressions, and hopefully you can get inspired by that and learn from that. But you learn irrespective, and it sort of constantly becomes an improvement. It's almost like a computer program that keeps improving, an AI model, if you like, where you just constantly learn, improve, do things better. And that's a very, very enjoyable journey, a very satisfactory journey.
Yeah.
And it's a good way to be happy. It's one way to be happy, because if the mind is working all the time and you're not at a complacent stage in your life where you just say, I know it all, arrogant or whatever, which is never a good thing. But on the other hand, you're open for new ideas, new learnings. that's very inspirational, and it's a very good mindset to have.
Yeah. I think what I find fascinating about that is even now I can still see that you're so excited for the things like we were talking offline. You are probably going to be venturing into space soon over the next few years, and you're very excited about that, and you're excited to learn, you're excited to do more things. When you talk about this, right? Do you think people should try to live more of a life of excitement, live more life of, being a bit more uncomfortable and doing things, that is not there every day?
Well, I have the 7 fundamental Wimmer values that I would like to share. And this would be my sort of advice to your audience here. And I find that if you live after those, you will actually get very far and achieve a good degree of happiness. So let me share them with you, if I may.
Yeah, of course, yeah. I'd love to hear it.
Number 1, always have a mentality and a mindset to think out of the box. Be open for new ideas, because you never know when it might come across your path. It may be when you're stuck in the airport, where you end up in different shops that you wouldn't otherwise go to. It may come right now, but you always got to have this surplus energy to be able to seize that opportunity. The next Google or AI idea might just be in front of you. So be open for new inspiration. Be open for to think out of the box. Number 1. Number 2, follow your heart. Follow your passion. Be authentic. And have fun with whatever you do. If you follow your passion, your heart, you will move mountains. There's nothing stronger, no stronger fuel that you can put on the fire than passion. And you will find that a lot of the times, people who even put road blockage in front of you, when they realize that this is an unstoppable train, they eventually realize, well, if you can't fight him, we might as well join him and be part of it. And that's passion. If you show that passion and commitment and determination, you can move mountains. Number 3, focus and execution. Once you've figured out what these ideas might be that you want to do, you throw a lot of balls up in the air. It comes back to value number 1, think out of the box. Ideas up in the air. At some point, you got to zoom down, focus on certain one of them, and execute them. Stop talking about it. Get on with it. Just do it, like some shoemaker would say. And that's really key, because a lot of the times people have great ideas, etc., but they stay down in the drawer, and then they're kind of worthless. You got to take them up and do it. And that's a differentiating factor for me and other people who might thinking or wishing about going into space, for instance. I'm doing it. I'm not talking about, well, I'm talking about it to you here, but I'm also doing it. Other people, they have ideas and I want to, I wish to, and then 3 weeks in, they're like, well, I'm tired and I'm also distracted by this other thing, and the day-to-day kicks in. No, you got to stay focused on the mission. So when you throw the ball up in the air and you make that decision, that's what you do. And then it's just execution from there. That's it. No turning back. Value number 4, time discipline. Time is limited. Money, that can come and go. Time, it always goes. And the clock is ticking. The countdown is on at all times. So therefore, I'm not saying necessarily cram in as much as you want to into your calendar, but make sure that your values, whatever they are, and what's important to you corresponds to your time commitments. Because time is limited. We are on limited time on planet Earth. And space, for that matter. Number 5, teamwork. That's an obvious one. 1 + 1 + 1 = 5. Why is that? Because synergies are created within teams. Each team member brings something to the table, but extra synergies are created within teams. When we do space training, not one single person can be the expert on everything. We need people who've got access to these bases where we are training. We need, therefore, political contacts. Sometimes we need engineers. We need doctors that monitors our heartbeat and everything. We need space enthusiasts, astronauts, We need clever people all across, and not one single person can do the whole thing.
Yeah.
But when you bring the whole team together, you have a winning formula within space, but also and adventures, but also within other things in life. So it's simple, but it's true. It's very true. Number 6, risk reward. Always assess what is the maximum risk if everything goes wrong, and is that risk I'm now taking on the books justified compared to the upside? Now, we know this from investing, of course, and that's where I've stolen it from, the world of finance. You look to make an investment. What's the risk? How much can I lose? If you buy a share, you can lose the value of the share if it goes to zero, or you can maybe gain something. Ultimately, you can lose some money and gain some money, essentially. When it comes to adventure and space, you put your life at risk. It's a different risk profile suddenly. Yeah. You know, when you jump out of a perfectly good plane, skydiving, in particular if you do it over Mount Everest or as a world's first, there's a lot of risk associated with it. But you would only do it if A, you feel comfortable with the risk profile, and also if you think it's worth it. It's great, it's cool, you're breaking records, or you're going into space. And then value number 7, which is the most important of all 7 values, that's the following. Always remember to give back. Be a good, charitable citizen, not only because it's an absolute great pleasure to give back. There's nothing better when you're face to face with charitable needs and you make a difference.
Yeah.
You feel like you're the one who's winning because yes, you're giving, but you are enjoying it so much. I can tell you, nothing better than being right in front. For instance, when we did Everest, I was out there helping some orphanages, so kids in a tough situation. But we ended up funding them for 5 years of their schools, and that means that they could live out their dreams as we were living out our dreams of skydiving Mount Everest, and making a big difference like that. It just feels so great when you're face to face with it. So my advice is inspire others, give back, and we do that within Wimmer Space by teaming up with certain charities, using them as conduits for inspiration, for doing good. And interestingly enough, today we are in Tower Hamlets.
Okay.
And
nice.
We have actually run school program in Tower Hamlets, where over years we teamed up with a charity called the Ideas Foundation. Great charity. They ran fantastic school programs, motivating young kids to be interested in space, science, and STEM. And I played a little part of that by being the astronaut that came in and gave them an extra kick in the butt and whatever. And we've done that over a number of years. And some of those kids, from the early years, actually made it into Oxford and Cambridge. Wow. I'm not saying, certainly not by my doing, but it was by the charitable doing from this Idea Foundation. They did a fantastic job. And I think that's very important, because if you do that, you feel good about it, and it comes back like a boomerang to you one day when you least expect it, as a thumbs up or thank you or whatever it might be. Yeah. And I highly recommend it. It's how you should do, and therefore that's value number 7, and that's the most important of all of them. I'll give you one other example of that one, because that's a beautiful story. I was a decade ago, I gave a Wimmer Space presentation about my preparation for space and my adventures at the Danish embassy in Dubai. And there was an audience there, and it was, I gave a presentation, lots of questions, standard stuff. And it all went well. About 4 months ago, I received a message on LinkedIn from one of the people who was in that audience 10 years ago.
Wow.
Didn't know the person. I don't think we even talked to each other back then, but that person was listening. And she wrote a message to me saying, Per, you probably don't know who I am, but you changed my life. I was like, wow. Who are you and how did I change it? You changed my life. You gave a presentation that was so motivational that you kicked my butt. After that presentation, I quit my job, which I was not so happy about. I went in to study psychology, which was my passion, that person's passion. And today I have my own practice in psychology, and I'm having such a ball. I'm enjoying it so much. And that moment was really what changed my life. So thank you.
Okay.
That's beautiful.
That is very beautiful.
That's priceless.
Yeah.
I would argue. So if you can change one person's life a little bit from time to time in a good way, you've done the world a great service, and my God, you can be proud of it. So that's value number 7. Always give back, always be a good citizen, and always inspire others.
Appreciate you sharing those values, Per. And I think it's you definitely put a lot of thought into it, and I really do agree with you about the giving back and trying to provide value there, because sometimes it's not even just about, like you say, it's not even just to get something back. It's just really just to pass on your experiences and what you've done in life, because it does enrich other people's lives. And I think that's very important. So I'm happy. And you're here today again to enrich people's lives again. So that's why I said I really appreciate you featuring on the podcast, because I think we can learn so much from your journey. XCB is currently giving new clients a free share in Rolls-Royce when you open an account, verify it, and make your first deposit. And within a few days, that share is yours. I use XCB myself because it makes investing simple and affordable. You pay 0% commission when investing in stocks and ETFs, and you can earn up to 4.25% interest on any cash sitting in your account. You also get access to 10,000 stocks, ETFs, can start with as little as £10 and enjoy quick, secure and free deposits and withdrawals. It's one of the most straightforward platforms I've used, whether you're just starting or scaling your investment portfolio. So, if you'd like to kick off your investing journey with a free Rolls-Royce share, check out the link below or use code SAVVY and sign up today before the offer closes on the 30th of November 2025. Please note, the free stock promotion applies to the United Kingdom only. Your capital is at risk. The value of the stock may fluctuate. Limited availability. T's and C's apply. So many people would see risk as dangerous. You talked about, skydiving from Mount Everest, right? You seem to see it as an opportunity. How do you personally evaluate risk both in life and investing?
So I have a different approach to risk in investing versus in life. In investing, you do have to look at all sorts of measures, Sharpe ratios, Sortino ratios, all sorts of things where you can kind of measure risk, if you like. But ultimately, you can have a diversified portfolio. You can be liquid or illiquid in your exposures. There's all sorts of sophisticated academia you can apply to that. And ultimately, you try to do the best. What we do is try to be as conservative as possible, funny enough, on the liquid side, and then have a few sort of roll of the dices, if you like, where if things go wrong, tough luck. I mean, then you lose. That's okay. But the core is kind of protected, and we do that through a portfolio of ETFs. We built up a proprietary model that tells us what to buy and what to sell in terms of ETF. So these would be an S&P 500 ETF, there'll be an EM ETF or whatever. And our model, our asset allocation model, will tell us what to buy, what to sell.
Is it doing that like audits? Like how often is it doing that?
Yeah, we adjust it sort of on a monthly basis.
Okay.
Yeah, so it's not daily trading, anything like that, but it works, and it's a beautiful model. So we use that, and that's very risk adjusted, not particularly high risk. Any ETF might have, if it's an S&P 500 ETF, it'll have 500 stocks underneath. So very diversified. So not particularly risky. But on occasion, we'll take a punt on a direct PE deal or something like that. When it comes to life, then I guess I probably have a higher risk profile than a lot of other people.
Yes.
And I'm not... But that's because I'm an adventurer. Now, it doesn't mean I have a desire to sort of leave this earth, except going to space and come back, of course. But you always assess what is the potential risk profile on it. And as long as it's sort of lower single digits, then I'm okay with it. But once it gets into, say, double digits, then I'm not. So I'm not silly. I have a lot more to do in life, and therefore I kind of manage it. But obviously there's a bit more risk, and ultimately you do when you do these crazy things, you do take a bit more risk on your book, whether it's jumping out of a perfectly good plane above Mount Everest, or going to space, or traveling deep into the Amazon jungle. unsupported, etc. So, but that's the price you have to be able to take on board if you want to gain that exposure of setting records or doing great things.
Yeah.
And we all have our risk profiles. Some have a lower risk profile and some have a higher risk tolerance. And that's okay. I'm not, if you have a low one, that's okay. Watch the movie or read the book.
Yeah.
That's it. But enjoy life above all.
Yeah, I think it's important for people to enjoy life. But like you say, I think it's more important to understand like I told you, I'm not into flying, so skydiving, I don't know if I'll ever do that. Maybe I'll get to a point in my life where I've lived a lot of life, I've done a lot of life. I can risk it now, I've done what I need to do, I can do it. But I don't know if I'll ever get there.
Maybe I'll take you skydiving one day. We'll do an initial skydive with a string attached.
The normal skydiving.
The normal stuff, yeah. And incidentally, normally when you skydive, you jump from 4,000 meters or 12,000 feet. That's normally standard skydiving height, particularly if you do with your first one.
Yeah.
We landed at 4,000 meters or 12,000 feet. We jumped from 9,000 meters or halo jump above Everest or close to 30,000 feet. So quite high up. You're basically up there where the jet streams are powering ahead. It's minus 55 degrees centigrade. You got oxygen mask on, helmet, bank rubber, clothing on for protection of your skin, specially made suit. I mean, this is serious stuff.
Yeah.
This is a halo jump, or in fact, and our skydive master was an ex-MI6. He was a real life James Bond, for real. So we had some pretty cool stuff going.
Wow.
And you need that when you're kind of jumping from that high and landing,
exactly
where normally people jump from.
That's amazing. So, flying to the edge of space in a fighter jet isn't something most people ever do. Did that change the way you see the world and your own limits?
Yeah, so I've flown fighter jets, MiG fighter jets, to the edge of space at 80,000 feet or 26 kilometers or thereabouts. And at that altitude, it's actually quite, it's very exciting first and foremost to get up there, because you sit strapped in, you got your mask on, you got your helmet on, and it's very Top Gun, let's be honest. You put the afterburn on and my God, the G's suddenly kick in, and off you go up to space. But the funny thing is, once you hit cruising altitude at 80,000 feet, it's almost like sitting in a library, a beautiful library or an IMAX theater, because you're traveling. In order to keep the plane that high, you have to travel very fast, because a jet engine sucks in air and spits it out again. And there's not a lot of air at 80,000 feet. It's very thin. In fact, this is as high as you can go on any jet-powered plane. So you have to travel very fast. And we were traveling at Mach 3, which means 3 times the speed of sound. Yeah. Speed of sound. We're sitting here next to each other. That's almost instant, isn't it? We were traveling at 3 times the speed of sound. And because of that, it means that sound can't keep up with our jet fighter. It just can't. And therefore it's very quiet, which is very surreal. And even though you're traveling that fast, because acceleration is now constant, there's no pressure, there's no G's. So it feels like you're sitting here in your comfortable armchair, like I am right now, looking out at this beautiful, beautiful Earth. You got a pretty good view from 80,000 feet. So you see the beautiful Earth, you see the clouds or a white sort of line there, and then the blackness of the universe is there. And it's blacker than black, I can tell you. I mean, once you're close to it, you've not seen real black until you go to space. The colors are so much stronger. Yeah. Blue is blue, like really blue. Wow. Black is black, and white is white. It's a whole different color set up there, I tell you. But above all, it's a beautiful to see the curvature of the Earth, and I'm pleased to confirm the Earth is round. Not
it is round. It's not flat. Oh gosh, we're dispelling that theory right away, right?
Just to put it right.
Gosh, how did you feel? Was there any kind of fear, as you were about to embark, on the edge of
not
space?
at all. No, it's our very only excitement, to be honest. It felt very Top Gun. very, very Top Gun to be suited and booted. And don't forget, when you fly fighter jets at those altitudes, you wear a special suit. Not this suit. This is my flight suit for 0G. But you have another suit on that has tubes built into your suit, which can provide pressure on your legs. Like when you go in and take turns, strong turns, pressure comes on, which basically keeps the blood up in the upper part of your body.
Yeah.
And why is that? That's because if you start to do too many acrobatics, the blood runs out of your head and you can kind of faint.
Yeah.
You know, and we see that sometimes. And then if people do faint and then wake up again, you call it the funky chicken because you suddenly wake up and you're a little bit sort of disorientated in terms of what's going on. You don't want to do that too much, and ideally not at all. But that's the pressure you're dealing with when you're up there. But it's a ton of fun and very exciting. So no, I wasn't afraid. And I've flown various jets. I've flown L-39s. I've flown MiG-25s. I did a more people carrier C-2 Greyhound where we did an arrested landing on a U.S. aircraft carrier in the middle of the Pacific, which is quite exciting as well. And when you land on the carrier with the wires across, you come in pretty hard because you can't slow down.
Yeah.
Because if you slow down, you miss the wire. Guess what? You fall in the water. That's not good. So you want to come in pretty hard and fast, and then hope you catch the wire. But in the moment you catch one of the three wires, you brake pretty quick because you don't want to fall off the carrier. Yeah. So the G forces you experience are actually, even as an astronaut, they're pretty severe. They're very short in time, but they're like, really feel
What's G forces when you say that? What is
G forces? So G is basically, G is gravity. The force of gravity. Yeah, okay. You know, if I have a pen here and I drop it, it will be accelerating at G, 9.82 meter per second square. But when you go fast or if you brake, you experience forces on your body. Or indeed, when you go to space and you release the rocket and you accelerate so fast that you get multiples of the impact of gravity. So we, as an astronaut, we have to be able to carry 6 GX. So that means 6 Gs on your chest and 3 GZ. So 3 Gs that pulls blood out of your head. Now, what is 6 GX? Well, it's the equivalent of you lying right down here on the floor and having 6 adults standing right on top of you.
Oh my God.
That's 6 Gs for you. So you have to be able to withstand that.
Oh my God.
At the same time, they're pulling blood out of your head.
Oh my God.
So you have to do exercises to push back against that.
Okay.
But that you'll experience when you go to space.
Yeah.
And that's why going to space will never be like, oh, should we go to the Caribbean in a 747 first class, or should we go to space? I don't know. It's not the same.
Okay.
You're dealing with different physics going into space, and therefore you better train a little bit before.
Yeah. Oh my God. That experience sounds like so amazing, and the fact that you've done that, it just shows the kind of mindset that you have for just like really stretching yourself to the absolute extreme. And you're still working in finance. This is what's so crazy. Like a lot of this stuff that you were doing, you were also working in finance. And it just shows what you can kind of achieve if you really put your mind to it. It's not just like, okay, I just work my 9 to 5 and that's it. That's the extent of it. You can really just like go out and do more things if you really want to do. So as we mentioned, you know, you skydive over Everest, you know, you've flown in fighter pilot jets, you've gone to the Amazon jungle. What's been the most life-changing adventure and why, would you say?
I would say the biggest, sort of my claim to fame, or the biggest adventure to date was the fact that I did the world's very first skydive over Mount Everest.
Okay.
That's sort of a big tick in the box. Never done before. We wrote the manual. There it is. Other people have since done it.
Okay.
Well done. We had to get permits from 7 different ministries in Nepal. So talking about bureaucracy, that was a lot of bureaucracy. So that was difficult in its own right. We had to try to take half a ton of equipment up to our drop zone. And as you may recall, there's no motorway that goes straight up there. So this is on the back of yaks and Sherpas, up and down, up and down, up and down. So a lot of walking, getting used to high altitude. Once you go past 4,000 meters or 12,000 feet, your altitude starts to kick in. So you don't want to go too much higher every day, maybe 400 meters up, and then walk high, sleep low, walk high, sleep low. But you don't want to go like another kilometer up or something in one day, because there's a risk for your mind. You can get altitude sickness and stuff like that. So you want to be a little bit careful when. So we had a lot of preparations, but a lot of great people who knew what they were doing. And a lot of great adventurers who were enthusiastic about that. So that's probably my biggest claim to fame to date. But obviously going to space will make me part of a very small club of
so that'll
astronauts.
Be the next biggest one.
That's the next biggest one, yeah. There's less than 700 people ever who've gone to space in the history of mankind.
Whew.
And only 12 people have ever walked on the moon, and 24 people have circulated the moon. So space is a very small club still. Yeah. But we want to change that. We want to open it up. So many more people can get the opportunity to go to space by driving down costs, by having different rocket providers, different offerings, etc. So that's the goal, to open space up for much more and for many more people and for humanity.
And we're going to be talking about investing in space very shortly. So how do these extreme experiences feed back into how you invest or run your businesses?
You can say within the world of finance, and I run a family office, there are constraints. There are regulatory constraints. There are things you can't do and can do. There are risk adjustments. There are risk parameters, etc. So the world of finance in some ways is quite regulated and quite sort of measured. And there are a lot of rules you have to play by. When it comes to adventures, it's a blank canvas. It's a blank sheet of paper. And I like that, because you can really sort of write the rules. Obviously, you've got to respect certain things, and there's certain risk you don't want to take on board. But ultimately, what I really enjoy about adventure, or space for that matter, is you can really push boundaries, because there are a few rules. There are some physical rules you have to abide by, of course. But the rest is sort of open. Your fantasy can come up with great ideas, new records, or things you want to do, and then you execute them. And I tell you, when you're in space, not many people are going to tell you what to do and what not to do, because there's not a lot of rule measuring people around, police officers or whatever. Whereas when it comes to investing on Earth, there are a certain set of rules and regulations, and all that has to be respected. So it is different, and they kind of complement each other that way. Yeah.
And if someone listening wants to build wealth, what lessons from the adventurer's mindset do you think apply most directly to money and investing?
Well, if you want to build wealth, my best advice would be to become an entrepreneur. Stop talking about it, but get on with that and try. Maybe fail, but start again. Come up with a good idea that you're passionate about and where you feel there's a great market, and then just work relentlessly towards that idea and build up a company according to that. I mean, that's the best way to build wealth, is to become an entrepreneur, build up equity value in your company, and work hard and enjoy what you do. And then once you have made your wealth, then protect it through investing. And that can be some play money, where you can roll the dice and risk everything in that box, but also have some protection around the core, so that you still have liquidity or power to do whatever you want to do in the future.
From your perspective, right, the core and... So a lot of people say core and satellite. What's your thinking around what those percentages generally should be?
It's individual.
Yeah.
And I know other family offices who would be running 90% illiquid portfolios.
Wow.
Because they are entrepreneurs. They've built wealth through entrepreneurships and built and sold companies. And that's what they know. That's what they like. And they will look at, even if they're not building a company, but just investing into a company, they're looked at as a journey together. So I know family offices that are running plus 90% illiquid portfolios,
Wow.
but I also know some that are running 10% illiquid portfolios, and the rest is kind of more classic stocks, bonds, hedge funds, ETFs, more classic investing. When you know one family office, you know one family office. You don't know the others because each one is different. But there is a commonality between them. A lot of them are in real estate, one way or another, because that's when you make money, that's usually the first thing you buy. And number two, stocks, bonds, hedge funds, typically as well. And if it's younger wealth, you would typically also see more value-driven investing, like climate change investing, like technology, a lot more technology, and that could go as far as, say, cryptos or blockchain and things like that. That tends to be a little bit more in the younger generation with that, where it's more values and more tech-focused and perhaps also earlier focused, whereas the older generation tends to be a little bit more traditional in the sense of stocks, bonds, and a 60-40 portfolio. So it depends. It depends.
So you mentioned one of your businesses before. Actually, no, you mentioned both, actually. Wimmer. Did you mention Wimmer?
So we have Wimmer Family Office where we run the wealth preservation strategy, and then I have my merchant bank, Wimmer Financial, which has been going for 18 years now. So my background is Goldman Sachs. I was there in the 90s, and I ran Goldman's Scandinavian businesses on the equity side. And I was lucky enough to be there during the IPO, which turned out to be a good time to be around. And 18 years ago, I set up my own mini Goldman as a merchant bank, where initially we focused a lot on natural resources, mining, oil and gas, green energy, and a bit in real estate. Today, we do a lot in real estate. So we finance real estate developers in UK and Europe.
Okay, is that what a merchant bank does?
Yeah, exactly. So a lot of, we look at real estate projects every day. Typical deal size 30 million plus, equity debt, value add, ground up. So we do a lot of that. But we have a focus also within other sectors like aerospace, like industrials, like natural resources, and things we can understand.
Yeah, that term equity debt. So I understand for my audience and for me sometimes too. But for my audience, because I know some of these terms, but I have to ask them for their behalf because we like to make it like so jargon free as possible, right? So when you say equity debt, so can you explain that, if that's all right?
Yeah. So in any company, or let's say you have a real estate project, and let's just say you have a real estate project that will cost 100 million to develop. Let's just say that you're going to build a bunch of residential units somewhere. The capital stack of financing such a thing would typically entail 30% or 30 million of equity, and 70 million of development debt.
Okay.
So debt being potentially from banks or other credit providers, usually alternative credit providers like credit funds or so, that would take a first charge on the project. So in case things go wrong, they can take it back.
They'll get the money first,
And they would lend you money at some sort of annual interest rate of between 5 and 10% perhaps for the effort of supplying capital. And then you would have on top of that 30% or 30 million in my example of risk capital or equity that will, if things go well, make a good return, an even higher return because it's the riskiest part of it, and that's why a developer would do it. That could be, as much as having an internal rate of return of, say, 20% if it's a ground-up project. So that's very attractive. But obviously, if it doesn't go so well, then equity will be the first loss in the cap stack. The debt holder only starts to take loss once the project value falls below the 70%, typically. So debt and equity, different risk profiles. A debt holder gets a fixed coupon, typically. Just like if you put money in the bank, you might get 1%, 2%, 3% or whatever. A debt provider into a real estate project would get a higher return because it's more risky than putting money in the bank, of course, but it's still a fixed return. But they also have a lower risk profile because they are further down the capital stack. Whereas the equity people are the ones taking the risk, but also enjoying the benefits.
Okay. So do you only like help finance like just developments and big developments? So.
Yeah, we do mostly big developments, finance, ground up, and value add. We don't take permitting risk.
Okay.
We can go in and do stabilized debt refinancing, and we have done that. So, for instance, last year there was 4 retail assets in Portugal that we looked at. They were stabilized, they were performing. But there was a bank in there that wanted to go out. So a debt holder wanted to go out. We got contacted, and there was an urgent need to take that bank out and put another refinance in place.
Okay.
And we did that.
Okay, so you took over from that bank. Okay.
From the bank. Yeah, we refined it. Yeah.
How did you get into this? Because not saying that anybody that's listening that wants to get into it, but it's quite fascinating to learn about this. I know you said you mentioned you worked at Goldman Sachs, and we're going to talk a little bit about that as well. How did you get into financing? Because it sounds like the deals that you're doing are huge deals. In my opinion, I mean, multi-million deals,
Yeah, everything's relative. Yeah. And you do become a little bit sort of immune to numbers. And
yeah, that's true when you see it so much.
When you see it so much and sort of casually we would talk about a $30 deal or a $50 deal or a $100 deal, which actually means 100 million. So it does become you become a little bit immune to numbers. How did I get into that? Well, that's a longer story. I did 4 masters, and my third master's was a master's in political science, European political science, out of the College of Europe in Bruges, which I enjoyed tremendously. My other 2 masters were in law, and they were great, but I loved studying it, but I did not want to practice it. I thought it was really boring, to be honest. So I wanted to do political science. I enrolled in Bruges and had a ball there, absolute ball. And Bruges was kind of a European Oxbridge and a fast track to Brussels, effectively. And I did that as well right after. So I got fast tracked into the cabinet of the vice president of the European Commission.
Wow.
When Jacques Delors was president. In fact, his office was right above mine. And my boss, the vice president, was in charge of what we today call the euro. Back then, we called it the ECU. Okay. So the ECU project, combining the European currencies into the euro. So fascinating time to be in Brussels when this whole big project was happening. He was also in charge of the budget, so everybody came through our cabinet, and it was lovely to be the fly on the wall back then. But it sort of piqued my interest in finance and I realized I probably didn't know enough about it, and that's why I did my 4th master's and enrolled into Harvard University in America. And studied business, finance, and international relations. So I really could pick up on that. So that was kind of how my journey went into it. And I remember the second year at Harvard, I pretty much financed through my investments. I invested some of the scholarship money I got, and I ended up actually making such a decent return that I could actually finance my second year.
Wow!
Through that alone. So I was like, this is quite interesting. So it piqued my interest, and I was therefore interested in getting into finance. I started interviewing with a lot of the world's biggest investment banks, the likes of Goldman Sachs, Morgan Stanley, JP Morgan, et cetera, et cetera. So there was one sort of strain of interviews that went that way. Goldman's was probably my top pick because there was always this mystique about Goldman's. It was not the biggest, but they were the best, the most profitable, and it was still private. Yeah. So we couldn't really see as much about what was going on in this secret machine that we could on some of the other companies like UBS or Morgan Stanley because they were all listed. So I was very keen on that. And at the same time, I still had this interest from international relations, even when I graduated from Harvard. And I did interview with a few jobs in that sector as well. And I was actually offered a job, would you believe it, in the White House.
Yes.
Under Bill Clinton. So they took in 42 presidential interns that year, 41 Americans and 1 non-American from Denmark.
Wow.
As it so turned out. So I was very keen on doing that. And I sort of jokingly say sometimes I kind of could have changed a little bit of the course of history that way, because it was actually that year where Monica Lewinsky was there, and she would have been my colleague.
Yeah.
And who knows what might have happened had I been there. But anyway, the rest is history. It became quite famous. And I was very keen on doing it. And for a long time, when I got the job offer from the White House and the job offer from Goldman Sachs, after, by the way, 38 interviews. 38 interviews.
Yeah.
They spent over $1 million recruiting me.
That's crazy.
It's crazy if you think about
crazy.
it. I had 1 round in Boston, 2 rounds in London, and just for good measure, just to be absolutely sure, they sent me to New York to interview with all the top brass from Goldman's, the head of international, the head of fixed income, the head of equities, the head of the heads. The only one I did not interview with was the CEO, but pretty much everybody else. So they spent a fortune recruiting me, and therefore it's also difficult to say no after that, because you're kind of involved in the process. Anyway, I wanted to do both jobs. And I realized I could not be in DC and in New York at the same time. Unfortunately, no matter how much I tried, and ultimately I had to make a decision. And given finance was going to be my sort of long-term career, I opted for Goldman and turned down the White House. But you make a decision, you move on. But it could have been fun as well. And I do have a lot of respect for Bill Clinton. I do think he's one of the most well-spoken U.S. presidents ever. You can agree or disagree with the politics, but as a person, I've seen Clinton speak, and he has an incredible ability to connect, even in a big room. I remember he came to Europe first time as U.S. president, and we were invited as College of Europe students to Brussels to listen to his speech, and we were probably 500 people in the room, and you would feel like he was speaking just to you.
Yeah.
Even though there were all these other people around, it was so personal. He was a great speaker, very great speaker, very, very talented, I have to say. So I would have loved to work underneath him in the White House, to be honest. So it was difficult, but no regrets. I had a ball at Goldman's. I joined there in the 90s. Yeah. It was a .com era. It was crazy. Wall Street was crazy. Yeah. You've probably seen the Wolf of Wall Street.
Yes, I have.
Great movie. Not all of that would truly apply to our situation, but rest assured, it was a lot of fun. It was intense. We worked hard, played hard, and I was single in New York, and so it was 24/7. It was tons of fun, and obviously we made a lot of money back then. And then on top of that, Goldman IPO'd, which turned out to be a good time to be around. And that kind of set off my career in finance, and I obviously learned a lot from that time. Yeah. And eventually, when I broke out and set up my own merchant bank, I had a lot of trusted contacts from that, which in turn helped me starting the business.
Yeah, because you was an executive director, so you left as an executive director. So
that's right.
I understand.
And I would also say for any of your listeners who are contemplating setting up a business themselves, I'll give them 3 pieces of advice. Okay. I would say, number 1, keep your costs low. Don't build. It doesn't have to be golden and look amazing. Just take it easy on the cost to start with. Number 2, don't wait for your business plan to be perfect. Just honestly get on with it. And I'll tell you, if I had waited until I had perfect information to start my merchant bank, I probably would never have done it. And because of so many things that I didn't know, and had I known about it, I probably would have been scared about it, to be honest. So there's a degree of roll the dice, get on with it, stop talking about it, and you'll figure it out. And number 3, instead of sometimes scrambling to raise early stage capital, seed capital, etc., which a lot of people do, try to lock in some early revenues instead. maybe from your contacts, your previous life, your previous experience. Because early revenues is golden when you're starting a business. It doesn't dilute.
Yeah.
It's actual clients.
That's true.
It's actual clients.
Yeah, that's true.
You're providing a service. You're proving your business model. You're actually delivering on it. And then you need to build from there. It doesn't dilute your business. In fact, it adds to your business. It proves your model is working. As opposed to raising equity early on, which is the most expensive equity you will ever raise because it's risky. It's early. So you want to give away as little as possible early on, which in turn means that, for me, I've managed to stay non-diluted all the way, but that's not for everybody to do. But try to push out the dilution as far as you can, and the best way to do it is keep your costs low, make as much revenue as you can, and then just work hard to sort of get there to create the equity value in your business. And then later bring in some partners or whatever you want to do.
Yeah, thank you so much, Per, for explaining the story of how you got into it. And it does make sense. And I think this is important for people to understand. There's a reason for everything, and you can really take a lot of value from, the experiences that you're working in. That time at Goldman, even if you did want to start a business, which you eventually got to, it was still quite valuable for you because it added so much, right? It gave you, the contacts. You would have had skills that you developed there, information that you developed there, insights that you developed there. So I think anything that people are doing in life, they are getting something from it, even if they think because sometimes people will be like, some people say, going to uni was worthless. I don't have that feeling. I've got a first degree, I got a master's. My first degree was not something that I'm doing now. It still was useful, still gave me a perspective and it gave me a skill. And I think sometimes people overlook that, those
Absolutely.
things. There's always there's a ladder. You just don't get there. You're doing several things.
That's value to what you have as background and leverage your background.
Yeah.
I study, I've got 3 law degrees, 2 masters and 1 BA in law. I don't use it as such, but I benefit from it because we can save a lot on lawyers because I can do the basics myself as a business entrepreneur today. So it does help. So you can leverage your contacts, your background. But most importantly, if you're setting up your business, then leverage wherever you're coming from in terms of getting early clients in or trusted clients in. When I set up, even though I had a number of things going for me, my background at Goldman Sachs, Harvard, some good clients and contacts, there was no guarantee it was ever going to work. There's no guarantee. You still have to try. And then it's one thing if you have a Goldman sign on your back. It's another thing if you have something people have never heard about on your back before. Who are you? And why should I deal with you?
Yeah.
You're used to dealing with sort of the tier 1 echelons of things. And why would they want to do business with you? It's not a guarantee.
Yeah.
So you still have to take that risk. But the more you can de-risk it, the better it is. And early revenues are golden.
Yeah.
Trust me.
Amazing. Running a business is tough. Invoices, receipts, tax deadlines, it never ends. I used to spend hours digging through spreadsheets and receipts just to figure out where my money was going until I started using Xero. Xero completely supercharged how I manage my business finances. Before I was constantly second guessing my numbers, now everything's accurate and automatic. Invoices send themselves, payments sync with my bank, and I can see my cash flow in real time. All on a single platform. What I love is how simple it makes everything. Xero takes the stress out of bookkeeping, freeing up the time to focus on growing my business instead of being buried in admin. Xero even makes managing bills easier, showing what's due and when, so I can stay in control and avoid unnecessary late payment fees. And when it comes to tax season, everything's already organized and ready to share with my accountant stress-free. It's honestly like having a digital finance assistant that never sleeps. If you're trying to scale your business or just stay on top of your numbers, this is the software that could actually save you time and sanity. And because I use Xero myself, I got something special for you. As of filming this podcast episode, you can get 90% off Xero for 6 months by visiting xero.com/savvy-wallet or clicking the link in the description and start supercharging your business with Xero. So space is clearly a passion for you. Why do you believe the space economy is going to be a big wealth creation area in the future?
Well, this aerospace industry has gone through a lot of change. So if you go back when I started being interested in space in 2000 and signed up for my first trip to space, it was, and the following decade and a half, investing in space was still for the high net worth individuals who were just passionate about it, didn't really look at a return or whatever. And that was certainly the case for me. I've invested in a number of space companies that's gone bust, quite frankly. But why did we do it? Because we wanted to see more space. We wanted it to move forward, and not always did they succeed. That happens. In the past 7-8 years, the aerospace sector has changed a lot. It's actually become very investable.
Yeah.
And we have seen a massive capital shift and interest from family offices and even big institutions that are now putting serious money into the space sector. Serious money. It used to be that was all driven by NASA with a budget of 14 billion, etc. They'll outsource some contracts, and they increasingly started to give out contracts to private companies. But today you have some fantastic companies that are being built up. I mean, a couple of examples. Perhaps the most famous is SpaceX, Elon Musk company, that's now worth $400 billion. That's the latest valuation. And people are throwing money at that company like there's no tomorrow. They're asking to be let in at a $400 billion valuation. It's crazy. But it's a real business, and they are generating multi-billion dollars of revenues. Elon has really done a fantastic thing. But even below SpaceX, you have other up and coming. You have Vast Space, Stoke Space. Stoke Space is for $500 million is going to be putting rockets into space. Okay. That is very cheap in rocket terms, and an amazing uplift in terms of the equity value of the company. We worked with and invested in a company called Voyager Space 6 months ago at $1 billion valuation as part of their Series C. They floated a few months back at 4x. So 4x within 6 months, not bad return at all. It's since come down a little bit, but nevertheless, it's a real company doing real things with $250 million of revenues, etc. So there's a lot going on there, and space has become very investable as a sector. Yeah, and I'm only excited about that because that means it attracts more capital, becomes more mainstream, and that means we're going to see many more propositions up there from everything from satellite imaging that will benefit agriculture.
Yeah, I've seen a couple of businesses in that area.
Have you seen that? Yeah, it's exciting,
it's very exciting, yeah.
Or you can do a lot more pharmaceutical trials in zero G up there. And for the pharmaceutical industry, it's very important that the crystals are sort of perfect. And they're only perfect when they're done in space because there's no gravity or microgravity. Okay. So it has huge benefit for the pharmaceutical industry, which in turn will mean improvements for health on Earth. Wow. Communication technology, you'll see a lot more efficient satellite communication, Starlink with SpaceX. Eventually you're going to have direct personal phone to satellite contact. First it'll be text and later it'll be phone calls, which means you can use your phone anywhere and a lot cheaper. So there's a lot of benefits that space can bring to the table and business model that comes with it where people can make a lot of money. Yeah.
With Voyager, what convinced you about them? I
thought it was a great company, great management team, and clearly they're going places in terms of building up the business. So very exciting business and executed well in a relatively short period of time, and we could see sort of into the future there was more to come. So it looked very interesting.
What does Voyager do? It's Voyager Space, right?
Yeah. They run a lot of customer relationships. They do software and a bit of hardware, and eventually they're going to build a space station, a private space station up there, just like the ISS. So today you only have two space stations up there. You've got the International Space Station, and you got the Chinese space station. Yeah. But there will be more private space stations coming.
I see. So they're looking to power the space industry.
Yes.
Not so much like building rockets and stuff like that, but they'll help the infrastructure of space.
Exactly. Okay. They will. They're not building rockets. Yeah. They leave that to SpaceX or Stoke Space or other people. ESA. SpaceX accounts for about half of the world's rocket launches today, and they are a customer of SpaceX. Last year, SpaceX sent up 134 rockets.
Okay.
With only one little hiccup on one of them, so it's a pretty reliable vehicle, relatively cheap and efficient because of the reusability that's being put in place. So they're very good in that, and there'll be others coming along in that, because a lot of stuff needs to be transported up there. There are big demands in terms of getting stuff into space.
So
So the transportation bit, we need more rockets because there's an awful lot of demand, pent up demand that needs to take place. But with that, the stuff you take up there, like satellites, there's a lot more business plans that will unfold that will benefit planet Earth.
Okay. So is it only satellites that we're taking up there? So satellites we're taking up there.
And people. People. Okay. I mean, on the Falcon 9, if you stick the Dragon capsule on top, the Dragon capsule. So that's a capsule where you can put in actual astronauts and fly them to the International Space Station.
Oh, wow.
Yeah. So that exists today. That's flying today. Wow. And that's going up and down as and when we need to change the astronauts on the ISS. And eventually you'll get more offers in that regard, and you'll also be able to fly further out, and eventually we'll make it back to the moon.
Yeah. Okay. So obviously flying people out there, flying space station, so in this space areas, like there's lots of things, like you say, infrastructure, data, that you can think of, imagery from space. Wow, there's a lot.
And a lot of that has value. So if we translate into how concretely does it help life on planet Earth? Well, concretely, you can get a better weather forecast by seeing what's going on from space. That in turn helps us prepare for big hurricanes in the Caribbean. So we know exactly what's going to happen when, awful as that might be, but at least we're better prepared ahead of time so we can pack up and protect our stuff. You can also better assess agricultural impacts and therefore grow crops better. Pharmaceuticals, like I said, you'll be able to do a lot more pharmaceutical trials in space, which helps the industry go faster and cheaper, and therefore that will benefit humankind and patients on planet Earth. You come up with new inventions of new drugs, etc., faster. And communications, faster, more efficient communications. So there's a lot of benefits you get from space that you may not actually realize. And then on top of that, there's two more things which is also important. Number one is just because space is difficult. Whatever you do in space is usually a little bit more difficult on Earth. Therefore, you have to invent things, invent technologies that you can use up there. But by chance, it so happens that new inventions ends up having other applications on Earth that really benefit Earth. And you could argue that the whole Apollo program back in the days effectively created Silicon Valley because it was a big catalyst with a lot of state dollars attached to it that ended up creating, the computer. The computing power on the Apollo program was less than the computing power on your phone today.
Okay, wow.
It had virtually no computing power. It's insane. But I think finally, the most important positive aspect of space is because it's so exciting for most people, whether they are male or female or young or old or whatever, is that it has such a fascination for us, and therefore it has such an ability to inspire. So when we talk about space, people usually get very excited. So whatever you want to do, excite, innovate, inspire in space, people usually get carried away, and it motivate young people to do science and STEM, and I think that's fantastic, and that's a very important characteristic that I'm keen to bring out to schools and talk to kids about and motivate them to do well for themselves and for society.
Yeah. So we spoke about you having a big win with Voyager, but what's a space investment that didn't go to plan, and what did you learn from it?
So I invested in a space company called Aerospace. Really great guys, low cost, which I liked a lot. But this is a long time ago, and lo and behold, it was before the whole space sector really started to take off. I was going to be their first astronaut to go into space on their rocket, on their Lynx rocket, and I did it because of that, because it was just fun. I wanted to go to space. I wanted to help them get there. But very sadly, they collateralized some of their assets, and in 2018 or thereabouts, that kind of collateral got called in, and that effectively collapsed the company.
Wow.
But it was up until then, it was still very difficult to raise equity for even promising space companies. It was driven by high net worth, enthusiastic people who would support the mission. But after that, it started to become a lot more mainstream. And I think if that company had been around today, they probably would have made it to space.
Yeah. When you say collateralize, what does that mean?
Oh, collateralized, that means if you provide debt into a company, you take a charge over the assets.
Ah, okay.
You're not investing equity, which is risk money, but you're lending them money. And if you don't pay it back, I will take your assets.
Right.
A bit like a mortgage.
Yeah.
If you have a house and you take a loan from the bank, if you don't pay the bank, they'll take back your house.
Okay.
So it's the same kind of thing.
Okay. Thank you. Thank you for explaining that. I appreciate that. And yeah, because I remember reading about X-Core in your book, and it's a shame. Hopefully they can make a comeback. Maybe they can make a comeback, because I feel like we're, like you say, we're in an age of where we are moving towards that. And I feel like we're moving towards it fast as well. For the everyday investors who might not have millions to put into aerospace, how can they get exposure to the space sector realistically?
Not difficult. There are listed companies in the world, but Voyager is now listed company, so you can buy shares in that. You can buy 1 share, 2 shares, 3 shares. It's cheap. There are also here on the London Stock Exchange, you have certain listed space companies as well. So you don't need a fortune to be exposed to it. You can literally buy a share through your bank or your security broker and get exposed, or perhaps even better, buy an ETF, exchange traded fund. With a focus on aerospace. So you kind of diversified your holding, but you just have 1 or 2 or 3 ETF shares in that regard. And that's probably a better way to de-risk it, as opposed to putting everything on red in the casino.
Exactly.
Probably have somebody managing it. That's probably not a bad idea.
I was going to ask actually if there was a space ETF. So thanks for sharing that. Is there many space ETFs out there?
There are some. There are some. Yeah. There's also some listed space funds here in the UK. Even you can buy into. Yeah.
Oh, I did not know that. I need to take a look into that. Okay, that's interesting, because like we're going to talk a little bit about this. Everybody's talking about AI, but space, it's just going that way. I was saying this to you offline, like it's definitely going that way for sure. But everybody's like looking at AI, nuclear, like the real, even those things, they're not even short term, they're kind of long term, but that's what people are looking at. And many people are forgetting space, but I'm keeping my eye on it. I'm not necessarily, I think I'm invested in one company, but it's not like your typical, it's not like shooting rockets into, the atmosphere or anything like that. So, looking into the next 10 to 20 years, what role do you see space playing in our daily lives and global markets?
I see space being increasingly important in our daily lives. You may not realize it, but it will be. There's a ton of capital going into the sector at the moment. There's an incredible amount of innovation, newer business ideas, and a lot of them are very solid. So there'll be a lot more innovation. Space is being privatized to a large degree. There'll be a private-public partnership when it comes to space, but a lot more new businesses. A lot of entrepreneurs will make a lot of money doing that. But there will also be a lot of benefit for people on planet Earth. So I do see, if you look at the forecast, a huge growth in the space arena, whether it's through service providers, satellites, even software solutions. The rocket part of it is almost the smallest part of it, funny enough. Just taking people up, perhaps the sexiest part, because we all like good rockets, but it becomes kind of commoditized a bit. It's transportation, where the higher margins are in some of the satellite services you can provide, and service offering that might be a little bit less easy to understand, less sexy perhaps, but that's where the bigger margins are.
Elon's got Starlink, like, providing internet and things like that. And like you say, the imagery, things that are not the obvious, maybe the boring businesses, maybe it's not, like you say, it's not about the rocket launch, but it's actually how do we provide data to people? Because we provide data to billions of people, instant value, right? Rather than, okay, yes, rockets are nice, but there's more value that you can kind of get out of it as well. Yeah,
100%. And Starlink specifically is truly the gem within SpaceX. Yes, they got a great rocket launch business, and yes, it's very spectacular when the Falcon 9 flies every 2 or 3 days out of the Cape. It looks amazing, and yes, they make money on it. But the true gem within SpaceX is Starlink. That's a real cash cow that has a potential to threaten and disrupt several industries. Yeah. The satellite industry, because they can do it better and cheaper than anybody else because they have their own rockets to launch it. They can end up disrupting the mobile phone industry if you have direct-to-consumer access. First it will be text, and later it might be telephone. That means they can put price pressure on the existing providers here. They have a really big disruptive effect potentially. So watch that space, and also watch Elon specifically. He's an incredible genius, a true visionary of the 21st century. And I've had the great privilege of hanging out with him a little bit from time to time. Before he became a rock star. These days he cruises at different altitudes. But we used to see each other a little bit here and there, and we've even had dinners down in the Caribbean together. And a few years ago, I helped produce a documentary about Elon, which is on Netflix, called Elon Musk, the Real Iron Man, which is about Elon's journey. And in there, I say, and I'll say this again, never ever bet against Elon. Never ever. Is
he that intense?
If it's sort of 1 to 99 in your favor, don't take the bet.
Really?
Don't take the bet. He is very, very smart, very clever, and he will figure out a way to make it win. That's why, and it's incredible what he's done in his lifetime. I mean, he's probably worth $500 billion today, and he'll probably be the first trillionaire in the world. Probably by the way he's going. It's incredible. It's crazy as an entrepreneur. But well done him. He's a true disruptor.
That's amazing. So I wanted to walk through the key things you look for before making an investment, and it's more specifically like ETFs or stock investments. Because many of the people that listen to this, that's what they kind of do.
Well, it depends what you look at. If you look at a private company, you always look at management first. It's about the people. Above all, you invest in people, particularly if it's an early stage company or even later stage. So average management team will probably mess up a world-class project, whereas a top-notch management team will make something special out of an average project. So the people is very important. Who's in charge, the leadership. So that's number one. And then number two, when it comes to listed investments, ETFs or whatever, you got to look at what it is, what's the potential for growth, and what's the valuation. And valuation is, to a degree, subjective. But you got to look at historics. You got to look how much are you paying for growth? How many years out in the future? How many times EBITDA multiple or free cash flow are you paying for? I like to evaluate companies based on what we call CFROI, cash flow return on investment, where you actually look less at the earnings profile, but you actually look more at the cash flow, because the cash you can't cheat with it. It's either there or it's not. So looking at cash flow based companies with high margins, and importantly, just like Chris Horn would say from TCI, or Warren Buffett for that matter, look at the moat that is around certain business models. If you can come up with a business that has a strong moat around it, whereby it's difficult for competitors to come and eat your lunch, then you have a good thing going, because then people have to come to you and have to use you, and they have little choice. And then that becomes a very sustainable business in many ways.
Yeah.
So finding these companies with good moats around it, and that could be, for instance, if you're a supplier to the aviation industry and you have something very clever that nobody else has, but everybody needs it, they will have to come to you, and the plane won't fly until you get that little piece of equipment in there. If you have something like that, then that's beautiful.
Yeah.
Some would argue that Microsoft, to a degree, has a degree of moat because a lot of us have Microsoft operating systems on our computers. And once you have them installed, are you going to change them tomorrow because they increase their price by 5%? No, probably not.
Yeah.
You're at their installed base. So once you have these installed bases in there, you kind of got people on the hook. And are you going to say then, I'm not going to renew it? Well, that means your computer's not going to work. So no, I will renew it. I will pay. So that's what a moat is. It's getting these kind of characteristics where people are kind of forced to. You got them sort of channeled in, and they've got very little choice but to be a customer.
Yeah. So that metric that you mentioned, you said cash flow. What was it? Cash flow?
Cash flow return on investment.
What's that mean?
So it's basically, I mean, you actually look at the cash on cash, or you look at the cash flow that goes in. You analyze that. What is the business actually generating?
Okay.
Not in terms of their stated earnings, contract signed, but they haven't received the money yet. But you actually look at the cash flow return, the return on investment. That's a very key matrix to use, and there are models you can get where you can analyze companies through that lens, and that's a very good lens to use. There's a fund that actually my ex-boss, I had a stint at Collins Stewart, and back then there was a guy called Terry Smith who was my boss back then. And we had very much that philosophy in that company. And he later then since set up a fund called Fundsmith, which is very strong and have very much that philosophy. And even though it's a long-only fund, it's actually been very, very successful with sustainable returns over years and years and years because of that philosophy.
Yeah. So you mentioned obviously investing in aerospace, real estate, private equity. Why do you favor these over like the latest hot trends like crypto or AI and things like that?
Yeah. Because you can't be an expert on everything, and I certainly do not pretend to be an expert on cryptos and AI and the slightly more fancy stuff. You can only be an expert in certain fields. So I have my strengths and my weaknesses, but it's not to say they're not money to be made. I mean, if you take a company like the ones behind stable coins, which is actually a very clever business model, because you basically offer your customers a stable coin, which is $1, but underneath they're actually invested in treasuries, so they keep the yield. Yeah. So the company behind actually makes $13 billion a year with very little staff and everything else.
Wow.
It's an incredible cash machine. So there are money to be made in that space. I just came back from Monaco a few days ago, where I was together having drinks with a guy, fairly young guy, 30 years old guy, who clearly knew a lot about cryptos, very smart, very brilliant, etc., and allegedly worth 37 billion made in cryptos, which is insane. Wow. So there clearly are a lot of value to be had in there. And if you look at people who invested in Bitcoins early on, when it was $300 and now it's $100,000, $120,000, obviously you would have made a fortune. And I know people who've done that. But that means you had to go in early and be an entrepreneur. But you can't be an expert in everything. Okay. So I would say try not to spread yourself too thin. Find out where you think you should put. But don't always just chase the latest fad. That's also a fallacy. A lot of times people are like, they will jump on whatever's the latest. Now we want to do fintech. Now we want to do cryptos. Now we want to do blockchain. There's always now we want to do AI. Yes. That's great. And AI is going to be transformational, like the internet was. But there's going to be, just like the internet, you're going to have a few big winners like Amazon or eBay, etc. You're going to have some incredible winners coming out of AI, but there'll also be a lot of lost capital. So it's not just jump on the bandwagon and chase the latest fad, but be more smart about it.
Yeah.
And interestingly enough, if you look at the concentration where the money is going within that space, it's just incredible. If you look at the 200 billion odds allocated to VCs last year, about 40% of that went into 10 companies alone.
Wow.
10 companies. OpenAI sucked up a lot of that. And a few other AI-based companies took a lot of that.
Wow.
So OpenAI is now valued at 500 billion. Huge. And that kind of firepower they get and the capital abilities they have obviously puts them in a very strong position, because capital is also a competitive edge. Not to say that they're not other great businesses, etc., but it's such an arms race, and there will be an awful lot of lost money in the space. Yeah. So it's not just because you add AI after your company, or indeed you're successful raising a little bit of money that you'll be successful, because there's also going to be a lot of lost cases, a bit like we saw in the .com. Remember, there was so many companies with blah.com and nonsense.com, whatever, and a lot of those companies don't exist anymore. So a lot of cash burned, but a few amazing winners.
Yeah. So then how for you then, how comes you value aerospace and real estate then?
It's my passion. These are things I understand.
Okay.
Real estate is quite easy. I mean, you can value it on the gross development value or net asset value, and based on the cash flows, etc. It's relatively easy to rely on, and quite easy to deal with. What's financing is needed, what's the potential return profile. Whereas if you take some of the more speculative things, a new technology company that the founder might think is going to revolutionize the world, and therefore his equity will be worth a lot. Who knows? Suddenly another disruptor comes along and takes his lunch, and his company is worth nothing. Yeah. You never know. It's a lot more risky in that space. Or in the biotech space. In biotechs, you can make an awful lot of money if you back the right horse. But you can also go bust. So it's these are a very sort of high return, high risk companies, whereas real estate is a little bit more straightforward. It's always worth something. Values can go up and down, but if you have a building, it's worth something.
So, over 70% of people who watch these episodes are subscribed. If that's you, hit the subscribe button. It really supports the channel, it helps it grow, and most importantly, lets us keep bringing you valuable conversations like this one. Plus, you'll be the first one to know when new episodes drop. Thank you so much for your support so far, and enjoy the rest of the show. And how do you think everyday investors can tell the difference between hype and a real long-term wealth opportunity?
I would suggest be long-term greedy. Invest for the long term. Don't be taken away by the latest hype and whatever everybody's talking about. And usually when your taxi driver starts to give you investment advice, that's usually when you hit the other way. When your taxi driver starts to talk about his investment in gold or in blockchain, or whatever, that's usually when you know you've reached the peak of the market. So do your research, do your homework. Speak to other people, interact with other people, smart people in your network, and then make some measured bets. Don't bet the house on just one investment, but diversify your portfolio.
Yeah, amazing. So you spent time at Goldman Sachs as an executive director, as we mentioned. What were the biggest insights you took from that experience that still shape how you invest today?
There's a lot of things I learned at Goldman's that still sort of stays with me. Being long-term greedy was certainly a Goldman mantra. Never focus just on the short term, but be long-term greedy. Go for the good returns in the long term. Think long-term. Don't day trade. I mean, day trading is your transaction cost would very easily eat up a lot of the returns. So put on the bets and then go for the long term. We also learned a lot about culture. I mean, one technique, for instance, I learned from Goldman was and we use this today when we recruit into my companies. I always have everybody interviewing the new candidate to make sure there's a cultural fit, because it's not just when you hire somebody, it's not just about the talent, the skills. It's also about the cultural glue. And the cultural glue, I remember when I was at Harvard, I took a course about culture in business, and I thought it was the most blah blah nonsense, waste of time kind of softy sit in a circle kind of course. I thought it was really irritatingly boring and useless. But as a business entrepreneur, it is very important. It's almost half of it. Whatever incentive you put in front of people, that's one thing, and financial aspects is important, but it's half of it. The culture you create is equally important. How you run it, how the culture transcends down. And that's certainly something I picked up from Goldman, and including that interview technique where when we recruit, I'm just one vote, and everybody else is just one vote. And then we see if you all like the person or not. And it's a very good way of doing it, because when you do that collective running of recruitment, you end up getting some very good people, and you get very good data insights. Because some person might say, there was something that felt a bit funny, but it's probably all right. And then another one say, yeah, there was actually this funny about the person, and I didn't like that at all. And then suddenly you get a bigger picture. It's like, hold on, I think maybe we shouldn't hire this person. Yeah. So I learned a lot about that. But beyond that, from an investment point of view, obviously Goldman's a great learning ground. There's a lot of very smart people there. Incredibly hardworking. Don't know how they find time to be so rounded, because a lot of them are quite rounded. But yeah, you learn investing for the long term, and I think that's the best. In true sort of Warren Buffett style, buy quality companies at reasonable prices, and then stick with them.
Yeah. So we've had so many. You've lived through several stock market crashes. Right now, recently we were battling high inflation, high interest, even though those are going down. There's wars across the world. How do you kind of protect your portfolio from these kind of events happening, especially like when the stock market goes back and things like that?
What we do in our portfolio by way of insurance is something called CTAs.
Okay.
No. Okay. What's that?
Yeah.
CTA stands for Commodity Trading Advisors, which means nothing. But basically what we do is we allocate a certain amount of capital to quant-based hedge funds. So these are hedge funds that would trade financial futures, commodity futures, etc. And they would look at the trend following. So not so much the fundamentals, is the market cheap or expensive, whatever. The computer doesn't care about that. Yeah. It looks at the trend. So if the market starts to go down, like it did in 2022, you remember?
Yeah.
NASDAQ was down 30% and S&P 22% or something. So the futures would then start to sell off. So the computer would say, this is going down, let's sell. And it's going down more, let's sell more, let's sell. So it follows the trend.
Okay.
And you actually make money on the way down because they go short. Now, the computer will continue to sell even when the market turns. So on the turns, you will lose money because you are selling and the market is going up. That's not a good trade. So you lose on the turns. But if the market goes through a big trending period, down or up, these kind of quant funds, CTAs, do very well.
Right. Okay.
And if you add that into your portfolio, they actually show up when you most need it. So in 2022, our portfolio of CTAs was up between 25 and 35%.
Wow.
When the NASDAQ was down 30%. So the delta between those two is enormous. So they show up when your stocks are down, your bonds are down, your real estate is down. So when you most need it. And if there's one good advice I'll give to you in investing, it is a little bit flippantly, don't lose money.
Yeah.
And what I mean by that is manage the drawdowns. So when losses starts to show up, cut them as much as possible. And this is what you can do through having a CTA hedge fund in your portfolio. Because when it goes down, it will it will limit your downside. You'll lose on your long positions, your stocks or your ETFs or whatever, but you'll gain on the CTAs, which will compensate for that loss. And it's quite important to limit your losses. And I'll give you an example why that is. Let's say you have $100 today. And let's say you lose $50 because you were gambling too much in something. You were too concentrated bets. No insurance, no CTAs, no nothing. Okay, so now you have $50. For you to get back up to 100 where you started, you now have to gamble a lot. In fact, you have to double you need to make 100%. So you lost 50%. Ouch, that was not good. But now you only have $50 of capital. In order to get just back up to where you started, you need to make 100% return, which means you need to gamble a lot more with your $50, which then carries the risk you could go down to 25 because you have to gamble a lot to get back. So therefore, first lesson in investment, don't lose money. Manage your drawdowns, control your losses, and therefore if you have $100, you go down to say $90, it's okay because you can easier go back up to 110, 120, 130 by some good investments, hopefully. Whereas if you lose a lot of your principal, you really have to gamble to get back up again.
Amazing. Thank you so much for that advice. I think it's so like really inspiring for, the people that are investing now or looking to invest in the future. And I think it's great advice to talk about limiting your downside because I think it's very important. And again, spreading your risk, which you mentioned before. What would you say has been your best investment? I don't know if you mentioned that actually. You might have already, but what would you say you think has been like your best investment? Would you say?
Don't know. There's been
so many.
Yeah, but... there's been a number over the years. There's not one I would single out, but
maybe your most favorite best investment.
We sort of, at least on paper, we made 4x on Voyager in 6 months. That's not a bad return.
That's a great return.
Since come down a bit, but it's that's not a bad return. But also, my career in finance, the various IPOs I've been part of over the years, that's not been bad neither. But I wouldn't single out any one of them, but because it also depends on the risk you take on board. But we'll continue to look for good sources of deals. Yeah, absolutely.
So what's the simplest first move someone can make to get started with investing right away?
I would say if you don't know so much about investing and you don't want to be glued to the screen every day, but you want to just make one investment, I would simply say buy an ETF, a Vanguard ETF or something like that on the S&P 500, which is the US stock index. Maybe not tomorrow because it's hitting record highs at the moment, but when suddenly there's some bad stuff going on in the world and the index starts to tumble down, at that point, without being too clever, go in, buy the index, put it aside, and let it just sit there and do its thing. And you'll come back 5-10 years later and you would have done extremely well.
Yeah.
So if you do nothing else, just buy an S&P 500 ETF through Vanguard or something and just sit on that. And you would do quite well because the stock market does create value. These are businesses producing earnings, producing businesses, revenues, cash flows, and you're still diversified. You're not relying on one company. Let's say, one single company falls out of bed for some reason. It's fine if you have a diversified portfolio. So if you just did one thing, just buy a stock index, preferably the US one, because they create more value over there on average, and it's also greatly more appreciated by, and just sit on it for a long time, and you'll do very well. You'll do very well, and sometimes even better than people punting every day, trying to squeeze out alpha from home, trading on a daily basis. Because don't forget, when you sit home in the sofa, you're up against people who are hedge funds who are sitting there with amazing access to companies, sophisticated systems, and everything. That's your competition. And they're doing this for a living every day. And some of these people are fantastically smart. And even them, they might sometimes end up with an annual return of 6-7%. And that's your competition. Do you want to beat those? I don't think so, because you don't have the same access. You don't have the same ability. So you want to day trade against them? No, you if you do that too much, you end up feeding the alpha to them, basically.
Yeah, that's a good point, actually, that you say that. Yeah.
So better be long-term, buy the index or stock index for the long haul, and sit on it.
Yeah.
And then obviously you can also occasionally, if you see, for instance, if you saw a few years ago, you saw that the money printing press was starting to get going. You see government debt levels going up. The obvious reaction to that is to go and buy gold. And that indeed was what we would recommend some years ago. And lo and behold, you got gold now trading at $3,800.
Yeah.
So gold has done very well. Whether you play it through direct gold exposure or gold ETF, or whether you buy it through gold mining companies, the whole sector has done quite well, and rightly so, because the monetary value of currency is evaporating a bit.
Yeah. Amazing. Thank you so much, Per. So you've lived such a big life already. What motivates you now at the moment?
Well, I'm motivated every day. I have new dreams, new plans, whether it's adventures or whether it's on the business side. I live every day to the max, and I enjoy every day. And I think that's a good philosophy to have. I work with great people, nice people I meet. I enjoy exploring ideas, business ideas with, and I enjoy what I do every day. I wake up every day, whether I sit here and talk to you, or I do space, I do adventure, or prepare for the next adventure, or I look into a deal, which I'm going to do later here this afternoon. I enjoy everything in equal measure. And if you can make your life and your professional life such that you enjoy it so much, you've actually created a formula for being on holiday 365 days a year.
Yeah,
and what's there not to like about that?
Exactly, when you're always excited and enjoying what you're doing. So as a founding astronaut with Virgin Galactic, what are you most looking forward to about finally going to space?
Obviously, I'm looking forward to the rocket ride itself, which is going to be fantastic when they ignite or lit that candle, as we say, and we feel the G forces and go into space. And incidentally, I've been blessed to have met 4 of the 12 moonwalkers. Buzz Aldrin has been a good friend of mine for a long time, and he very kindly wrote the foreword in my latest book, the award-winning The Sky's No Limit. But I've also been fortunate enough to train Zero G with no other than Charlie Duke, who was Capcom on Apollo 11, and he was on Apollo 16. And we went flying together in a Zero G flight over the Cape, which was fantastic and a true privilege to train with astronaut royalty like him. He was the youngest Apollo astronaut. That's why he's still capable of doing this. But I asked Charlie, I said, listen, what's the best advice you would give to me as an astronaut going into space, you having done it? And you know what he said?
What did he say?
He said, Per, look out of the goddamn window. Forget about everything else, but look out of the goddamn window. And there's something truth about that, because there's a temptation when things get so excited, you want to film it, you want to do Zero G, you want to tumble around in the rocket, you want to do all these things. But a lot of those things you can actually do in a controlled environment when you do Zero G flights up and down. But what you can't do is look out of the window and enjoy that peaceful, beautiful, unique creation called planet Earth, which even in a context of a universe is genuinely unique. We are so lucky to have been born on this planet that has the perfect conditions for life. You have water, 2/3 of the world is water. You have the right temperatures. It's not too hot, not too cold. You don't want to go to Mars. Quite. I know Elon wants to go to Mars, and famously he said he want to go to Mars and die on Mars, just not on impact. Okay. Fair enough. But a Mars has got 96% plus carbon dioxide. It's not a particularly pleasant place to be. The ozone layer is gone, so you're being hit by radiation like there's no tomorrow.
Oh my God.
It's cold and it's hot and it's unpleasant. And all the water on Mars is stuck at the poles, frozen. And because of the funny atmosphere they have with the CO2, it can't really move down to the middle.
Yeah.
So it's stuck up there. So you have to sort of dig it out whenever you want something to drink. I mean, it's not a particularly pleasant place. So there's a lot of iron ore, which might be useful to build buildings, but not, I'm not sure. So a lot of the planets have all sorts of problems. And God forbid you start to go to Jupiter and Neptune and all that. It gets cold and hot and you've got volcanic activities, a lot of gases. And you don't want to go there. Planet Earth, we can breathe. Look at the plants we have around us. It's such a unique thing. Very, very unique thing. And we should truly appreciate that. And yes, there are other planets Earths out there. But they're just very far away. You probably saw recently that the beautiful James Webb telescope discovered this other little planet. It's got like a formula name, I can't remember. Very, very far out. And which is actually incredible in engineering on the James Webb. Do you know what it saw?
No.
And why we think there might be life out there?
I'm sure that there probably is life out there.
Yeah, but let me tell you where we're at in that. So, James Webb telescope saw a little tweak in the light that came from this far, 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 far distant planet that was 124 light years away.
Okay.
So what's a light year? That means traveling by the speed of light for 1 year. And speed of light is a lot faster than the speed of sound. So imagine the piece of light that travels for 124 light years gets to the James Webb telescope. James Webb sees there's a little tweak on that light that comes in. So it's not 100% normal. It's a little tweak. That tweak is the same tweak with a 99.6% probability as the things with plankton in the sea.
Yeah.
That comes out. So we think that there might be planktons and therefore life, bacteria on that planet, 124 light years away.
Wow.
This is crazy. So that's science at a whole different level for you with a 99.6% probability. So there probably is life out there, but the problem is we're never going to see it because it's so far away. Yeah. So let's appreciate planet Earth. Let's protect it. Let's not destroy it. Let's protect the environment. And by the way, lots of astronauts that go up, they go up and come back home with the so-called overview effect. It's a real thing. We all come back with a bigger understanding, bigger view on life. We don't get caught up in little problems like most people do every day. We just understand, we see the bigger picture. And one of the bigger pictures we see is climate change and be careful, protect the environment. That's a real thing. So if anything, be careful, protect the planet. It is so special and we don't appreciate it enough. So let's not destroy it. Yeah. Okay.
Thank you so much, Per. This has been such a great conversation. I've learned so much from you. We spoke about so much from space to your ventures, experience to investing. And I think this has been such a valuable conversation. So I really, really appreciate your time and sharing so much time with us and just sharing all your wisdom. Where can people find you if they want to connect with you?
Wimmerspace.com. That's my website. There's lots of information on there, and if they want to connect up, or on the usual social media, Twitter, Facebook, Wimmerspace, or just my name.
Okay, amazing. Like I said, this has been such a great conversation. People that watch and listen, please do let us know your favorite moments of what part of the conversation you enjoyed. I've enjoyed all of it. I think this has been great, and it's really just opened, my eyes to the possibilities of space. And I definitely want to have more conversations as that space is developing as well, because I think it's very important just to see, like how civilization is developing. Do you have any final words for watchers and listeners?
Just go out there, live out your dream, think out of the box, follow your heart, follow your passion, be authentic, focus and execute your dreams. Do it with time discipline and do it with a great team. So 1 + 1 becomes 5. Manage your risk along the way. And above all, inspire others to live out their lives. Then you have the formula for a beautiful life and a happy life.
Thank you so much, Per. I really appreciate you featuring on the podcast. Thank you so much for tuning into this week's episode. See you next week's episode. If you enjoyed this episode, share your favorite part in the comments, tap the like button and subscribe to the channel. Your support is really appreciated. We'll keep working hard to bring you more valuable conversations.